Okay, well, if everybody has their pencil sharpened, we'll go ahead and get started. Hi, everybody. Good afternoon. My name is Hannah Horn. I'm the Vice President of Public Policy and Programs here at the Hilton Highland Bluffton Chamber, and it's an honor and a pleasure to have a panel assembled today who can help guide us through what has just been a really confusing process. I know for just a tough time for a lot of businesses through applying for and receiving, and now how to actually implement and substantiate that PPP loan. I do want to make sure, and I cannot stress this enough, that today's date is May the 7th. And so all of the things that we're going to talk about on this call are relevant, and the information that we have on May the 7th at 1:30 in the afternoon Eastern time, because in an hour from now, things may change. We never know. So we just really want to make sure that we preface this call with that information. Here's how today is structured. We have, like I said, a panel of folks that we're going to get to. We're going to start with Mike, and then Dean, and then we'll get to Fred, and then we're going to open it up for Q&A. There's a chat box. Those of you who are familiar with Zoom, you'll see it. I think it looks like a little box that you would write into, like a little comment box, but just type in your questions. We'll be taking questions from there, as well as those that you have emailed into us. Okay, so we're going to try to get to as many of those as possible. So a little bit of background. So the PPP loan, the Paycheck Protection Program, was part of that third round of stimulus funding that Congress passed through last month, well, actually in March, at the end of March. And in that time, we have just been receiving little bits and chunks and pieces, and they gave it to banks to set these, to stand these programs up really, really fast, record timing. And so if you're confused, if you have questions, please know you're not alone, and we will do as many of these webinars as we can to try and navigate these uncertain times, as well as this very unusual loan that turns into a grant, which I know many of our small businesses are not used to. So without further ado, I'd like to introduce Mike Waters, and Mike is with our SCORE chapter. Mike is working one-on-one with a lot of our small businesses as they have either received this PP loan already or in application process. Maybe they're hoping to get in on what could be a third round of apportionment for this particular PPP. So Mike, if you'll take it away and just kind of give us some background and answer some of the questions that I know are front and center on a lot of our businesses' minds.
Well, good afternoon, and thank you, Hannah, for the opportunity on behalf of SCORE. And as you mentioned, a business mentor from our chapter. We're one of over 300 chapters in the country, and we are a nonprofit resource partner of SBA, but we're volunteers, and we assist small business and nonprofits. And what we do is, and there's a number of mentors that are on the call. Rod Casavan is our chapter chair. And what we found right away was in our work with our clients, new and existing, is that when these loans came out, we began to receive a number of requests right away. So we decided amongst ourselves that we would set up a special team, we call it the Rapid Response Team, to take these requests as soon as we could, assign them to a mentor. And there's a team within the team, if you will. So there's 15 of us that volunteered to say, I'll be on this team and help to get this information. Now, one of the most important things we're going to talk about today is we're talking from our experience working with clients here in the Low Country, as well as the other information that we receive. But important to us is that when we get a question, we go to the source. The source is SBA or Treasury. So what we learned right from the beginning is there's a lot of information out there, and a lot of it is good. However, we want to take it back to what we can find in writing, so that when we're responding to a client, we can refer them to where we have it in writing. Now, we also found right away was as responsive as SBA has been to us, and they have been exceptionally responsive, in that people like William Furman, who has been part of the chamber proceedings before, and the rest of the people at SBA, we submit questions on behalf of clients every day. We're now up to multiple pages of answers that make their way into the SBA frequently asked questions. But in order to answer those questions, we say to our clients, whoever you're working with, And it's important to also note that these programs are one of which you're working with a lender, right? So you're getting the SBA money 100% backed by SBA through a lender or a fintech, where the other program, the EIDL program, economic injury, is you're dealing directly with SBA. So what we've been able to do in that process is provide the answers based on what is in writing. And at the end, we'll have a couple recommendations on how you can get on the SBA mailing list yourself and where on the SBA site you can find this frequently asked questions. So we're happy to be here today and happy to help answer questions based on answers we've received from the SBA.
Okay, Mike, thanks so much for that background. And again, we're going to get into a lot of the specifics about the PPP and take those questions. Your questions really are going to lead this conversation, but I really did want you to hear from some of who these folks were who are talking to you and what area of expertise or kind of where they kind of book in their information, where they're getting it from. Dean is with Carey and Company, and Dean is a CPA, also has his MBA. Dean, I know you're working with a lot of your clients on the numbers, crunching the numbers on this, and making sure that loan forgiveness is optimized. Tell us about yourself and some of the things that you're seeing and hearing in your office.
Thank you, Hannah, and appreciate the opportunity to be with you today. As Hannah mentioned, I am a practicing CPA, so work with a lot of individual businesses, primarily small business clients. And once this program was rolled out, we got a lot of inquiries. And as Mike mentioned, we went to the written documents that had been presented and worked on following those guidelines in terms of assisting clients in the application process. Now, I'm sure many of you have completed that application process. However, just real briefly, for those who might be on the call that have not yet submitted or considering, as the program mentions, the Paycheck Protection Program, the calculation of the loan is based upon payroll. And if you were in business for the entire calendar year of 2019, they look at the average monthly payroll, including health benefits, retirement benefits, state unemployment payments, and that total of your average monthly payroll cost times 2.5 is your application for the maximum loan. What we found is, depending on the bank that you were working with, they were sometimes requesting different information. There was a lot of it that was standard and common, but some banks were asking for other information that another bank may not. So you really need to be close contact with your lender through the application process. And more importantly, I think here, once you receive your loan, through the 8-week period following for the documentation and all to substantiate that use of those monies for the forgiveness portion of that. And I know we're going to get a lot more details with questions. So with that, Hannah, I'll kick it back to you and proceed.
All right, Dean, thank you so much. Yeah, I know that there's been a lot of paperwork gathering and folks needed to talk to their accountants, their CPAs, whoever processes their payroll for them. So hopefully here at the beginning, or as you're anticipating that to go through, you have those documents. But again, if that's a question you have, if you're looking to gather those documents, we'll answer that question for you, as well as what are some of the basic things you need to start getting together now, just in case you're wanting to apply. This is just kind of an information session for you. Finally, we have Fred Green on the call, and Fred is the president of the South Carolina Bankers Association. And Fred, I know you're working with banks all around the state of South Carolina that they had just an enormous feat ahead of them whenever SBA and Treasury handed them this piece of legislation and said, hey, set up a loan program in a couple days.
Hannah, thanks for having me, and I really like your introduction that everything we're talking about is as of 1:30 today and a subject to change at 2 o'clock today, because we've seen a lot of that. And Mike and Dean, you guys did a great job in your introduction as well. Real quick, who we are, South Carolina Bankers Association represents every bank in South Carolina, whether they're headquartered here or whether they are headquartered elsewhere and have a presence in South Carolina. Jumping into the CARES Act on March 22nd, as it looked like at that point, it didn't even have the name other than the Rubio bill. After Marco Rubio, it was gaining a lot of traction. It was anticipated that it might have passed over the weekend. The senior exec at the South Carolina SBA, I called him. We got together by phone that Saturday, planned to get together on Monday. And the primary purpose was to try to get our banking industry up to speed as quickly as possible to be able to process what I anticipated, really everybody anticipated, a huge volume of applications. So the first step we did was kind of look at who was an approved SBA lender, more importantly, who was not, and worked on getting all of those who were not approved SBA lenders qualified to be able to participate in the program, whether they ultimately decided to or not. As it turned out of the 70 banks that do business in South Carolina, only about 3 did not participate, and it was really more of a size, an issue of their size and limited resources. So it was pretty broad-based participation. A couple of comments on where we are today. Everybody knows there was 2 rounds. First round was kind of oversubscribed. There were a lot more applications than capacity in terms of dollars. As that one ended, there was a huge backlog of applications kind of on bankers' desks throughout the country, certainly in South Carolina, to begin processing once the SBA got the second round allocation, which it did Monday of last week. The first couple days was very slow, chunky, a lot of problems, picked up huge momentum later in the week. As of yesterday, this is a national number, but as of yesterday, at 5 o'clock yesterday, on the second round, there are 2.4 million loans approved by SBA, represent 184 billion in dollars. And just kind of looking back over the stats since last week, there's about a $2 billion per day takedown. And so the availability of funds could go another 2 weeks. And the point I guess I'm trying to make for those who are contemplating applying for it is you have time. The backlog has been cleaned out. Banks are still accepting applications, but it's not as if you're, 200 or 2,000 in line. I think your application would be processed very quickly. The decision would be made very quickly, and then the loan proceeds would be issued very quickly. In terms of forgiveness, which is a lot of what we're talking about now, what do we do next? Forgiveness, documentation, guidance, rules, process, and procedures have not been issued. So what we're doing is trying to anticipate what those might be. I can say that with great certainty that when SBA does release those rules, your banker will immediately contact you and share those rules. And more than likely, there's going to be more documentation required. There'll be additional certifications. There'll be an application. The SBA actually makes the decision on the forgiveness. The bank is simply the facilitator. But as soon as the SBA makes or issues their rules and their guidance and their forms and their requirement for documentation, I can promise you'll get that quick response from your banker, because they want to be able to facilitate as much of the forgiveness as possible. And Hannah, with that being a quick introduction, I don't know if we want to move into questions, but I'll stop now, I guess.
All right, Fred, thank you so much. The best analogy that I've heard about this PPP program is that we are building the plane's landing gear while we are in the air. And that is, see that gray hair? That's, well, my salon isn't open, but also it's this program is really, really tough. It truly is. So hang with us here as we try to navigate it together. We received so many great questions, and let's go ahead and jump into that. I'll help direct traffic between Mike, between Dean, Fred jumping in there as well, knowing that he's on the banking side. Perhaps he would have insights into how decisions were made, but also, again, as they are anticipating the substantiation of this, which again, we don't have any guidance on. We're going to be extremely transparent, base things on the information that we have with the SBA. But again, at the same time, thank you so much for your questions, and keep them coming on that chat box, okay? So again, background, you went to your lender that you had a credit relationship with. You made application for a loan that would issue you 2.5 times your average monthly payroll, and you are anticipated to use that to get people back into their jobs, paying them payroll as soon as you get that loan, and then using 75% of it for your payroll, and then that other 25%, if you want to, could be used for utilities, rent, some other expenses as well. So that's the basic, in case you're really coming at this and need a 101, okay? But let's jump in. So the first question that we get is, I've gotten conflicting reports that the PPP was retroactive from employment as of February the 15th. And I know February 15th is an important date, but in reality, the loan parameters from the point of disbursement of the loan and for the next 7 to 8 weeks. So what's that February 15th date mean? And then disbursement of the loan in that 7 to 8 weeks. Mike, you want to handle that one?
Sure. So the February 15th date is very important because that means you had to be in operation as of that date. But the good news is that the clock starts on your PPP loan when you receive the funds. So in other words, when they are received by you, you have completed the process with your bank, your lender, or the fintech, and the money comes into your own account that you provided. You then have 8 weeks, so that begins your 8-week clock. And so there was some confusion about that. We're glad to clarify that. But let me also add that the recommendation made by SBA, meaning that they want these to turn into grants as well, that they are forgiven, right? Is that they highly recommend these go into a separate account if you can do it. That then facilitates that process, because as you reach your 8-week period, or maybe even before, you can begin to compile all the necessary information in order to submit it, as Fred pointed out, to the lender. So 8 weeks starts when you receive the funds.
And when you say put these funds into you're saying open up a second account that has these funds that you are using to disperse specifically from payroll protection and for its uses that have been lined out that say use it for this reason in order for it to get forgiven.
Exactly. And that
Okay.
What you want to be able to do is have a clean audit trail, so that when the time comes for you to prepare all the documentation, you, the recipient of the funds, the employer, it's very easily done, and there'll be no question because you'll have it all documented. If you hear documentation on this call once, you'll hear it probably 100 times in order to have a clear record of how that funds were used for the purpose intended of 75% for payroll purposes.
What if your business is considered non-essential? You've received your PPP loan, but you still can't bring people back into the office, so to speak, or back be customer facing because you're not able to?
So
Mike or Dean?
I'm sorry, go ahead.
Mike, do you want to handle that one?
Yes, unless Dean, if you have that.
Well, I can take a stab at it. You can insert what I might overlook, but and this becomes one of the challenges, and we're really waiting on guidance from SBA because of those non-essential businesses that have laid off employees, what the SBA indicates is, as Mike said, your 8-week period to use those monies begin when you receive the funds. What they say is you need to rehire those people as quickly as possible. And they have stated, even if they're not going to be doing work. So it somewhat extends that the Paycheck Protection Program was a way of providing monies to employees during this COVID-19 pandemic that we're dealing with. And so you bring those employees back to start building your case for the 75% of funds used for payroll purposes. I do know that there has been appeal to the Treasury on one organization is the American Institute of CPAs has petitioned the Treasury for further guidance to identify a clearer treatment of this because of those non-essential businesses who have not started back to work yet, or in states that still may have a stay-at-home order in place. And there are suggestions being made that the 8-week period begins at a later defined point in time than the day the loan proceeds are used. Unfortunately, that's not written guidance right now. So our recommendations to our clients is you have to start building that documentation file now. And as we've commented, this is ever changing and the rules are changing. It's like, Hannah, you mentioned building the landing gear of the airplane. It's like starting a ball game or a board game without the full set of rules, and the rules change as you play the game. That's a lot of what we're dealing with.
So let me add to that, and thank you, Dean, for that. So we had asked this question, which I believe is the question that you have there, and that is, my business is closed. I furloughed my staff, but I want to hire them back as soon as I can. Does my 8-week start when I receive the funds? And as Dean just said, it starts the day the funds are dispersed. So they do want the employees to be whole for 8 weeks. They want their paycheck to return, even if they don't have work for them. So that becomes the point of understanding about how does the business owner operate and get their business back going again and all those things. But the answer is they want them back immediately after receiving the funds. Now, the other related issue that's come up is when they do rehire or seek to rehire off of furlough, make the such that the employees can come back to work. And as Dean also said, document it that you've offered it, because if the employee declines, they will forfeit their unemployment eligibility. But then the employer is able to hire a new employee, and then they can pay them based on their receipt of the funds for payroll purposes.
And while we're on the subject here of the timeline of using your PPP, we got a great question from Lily about, is the deadline to use the funds still the end of May? Isn't it the end of June?
Actually,
it's whenever your 8 weeks begins, but is there the end, like this program, it ends?
So yes, that's a great question. We've had that a number of times. And the answer is your clock as the employer starts when you receive the money, and then 8 weeks. So that June 30 period was when you could apply. And that's how the detail is very important for an employer to understand that your clock starts when you receive the funds into your own account.
Okay.
And-
Here's Fred.
Yeah, Hannah, I was going to add, if you think about it this way, the first PPP loan made and the yet to be last PPP loan that'll be made at some point in the next couple of weeks, that's during an 8-week gap. So there was 8 weeks between the first and the anticipated end of the second program, which plays right into the conversation that it's based on the individual loan and when the proceeds were received.
Okay. Great point. Great point. So we know that 75% of this loan is intended towards payroll. You can use more of it for payroll if you want to, but there's a very specific language that 25% of this can be used for something other than payroll. And this is going to be so important that not more than 25% is spent on these types of qualifying expenses. We've got a question from Pam. Can you include office equipment lease payments as part of that 25%? So if one of you wants to answer that and maybe weave into the question about the office lease payments, but also what else are qualifying expenses in that 25%?
I'll answer that one. Or the 25% deals with, when it came out, it said mortgage interest, rent payments, utilities. There has not been, that I've seen, a real good definition of lease payments other than it had to be on an existing lease arrangement in place, as I believe the date also was February 15th. So if you were getting new equipment and leasing it, it would not qualify under that 25% portion. It's also if you had interest on other business indebtedness that was in place prior to the February 15th date. So it's no principal payments, only the interest payments on those.
And Hannah, this is Fred Green. Let me jump in to the point we're all making. Unless it is clarified in writing, there are different interpretations. So just 2 weeks ago, when asked in a group with the senior SBA official that same question, the response that he gave was when we're mentioning lease, we're talking about the office lease or the occupancy costs, not equipment rentals and things like that. So again, it's just clarification that's going to come out on this forgiveness portion.
Okay. Next question. Am I going to have to make payments on the loan in these next first 8 weeks? Sorry, that's a little disjointed. So basically, when you get the loan, okay.
Yeah. Hannah, I'll jump in. So the way the loans are structured is they're structured with a payment deferral for the first 6 months. So no payment is required, followed by that 6 months, followed by 18-month amortization. I did notice one of the questions too dealt with cost. There's a 1% interest rate, 1% annual interest rate, and there are no fees paid by the borrower.
Dean, Mike, do you want to add anything to that particular comment? Okay. There are a number of questions on how the PPP and the EIDL loan or EIDL advance are going to interface with each other. So our friend Gary says, I've received the PPP. What should I do if I get the EIDL, which he has applied for? Now, we were talking about this as an aside. There were a lot of people who applied for the EIDL or EIDL advance, and they still don't know if they're going to get it. And they may know that, and they were asked on the PPP application, are you getting any other, funds, stimulus funds? They really, truly answered that correctly. They don't know. So let's talk about how all of this works together, that EIDL advance and the PPP.
I'll start, and then I think probably you will have additional to add to that. So the good news is that they received the PPP, let's say, and they've applied for the EIDL. Now, the EIDL is primarily intended to be for working capital, right? But part of it can be used for payroll. So, but what you won't be able to do is have the same amount of payroll covered by both of the loans. So what happens is, and this is again from guidance that we received from a specific question, is that there will be a process by which the EIDL loan or grant and the PPP will be offsetting, and there'll be a change made in the EIDL or whatever the case may be, depending on which loan came first. That ultimately may result in the advice that we have received is that the business owner, for those funds that have been used for payroll out of one, has to refinance the EIDL loan into the PPP. Now, keeping in mind, the PPP is for 2 years at 1%, as Fred just mentioned. The EIDL can run up to 30 years at a different percentile. So those are just things to keep in mind. So there's a coordination between the two is the point that SBA is making.
And I think some businesses are mixing the two components of the EIDL because there is the loan amount that has the 30-year amortization or up to 30-year amortization that Mike referred to. What a lot of businesses were looking at was the $10,000 maximum grant under the IDL. So there's really sort of two pieces, as I understand it, of that EIDL. And if you've gone for larger amounts for working capital and all that Mike referred to, that becomes that's a loan with a payback. It's the up to the $10,000 amount that is a grant and is a forgivable, not to be paid back. The other confusion, I think most businesses said, I'm going to apply for the EIDL grant, I'm going to get $10,000. Well, it became subject to a head count and some other criteria in terms of how much, because we've had businesses receive 1,000, 3,000, 7,000. You don't always get the full $10,000 grant.
That's a great point. And for those of you, several of you have written in, and I know there are a lot of questions about the EIDL loan or grant, but let's save that for another webinar. But there were a lot of questions about how it interfaces with the PPP, but very important there. The EIDL loans and advances are still being processed. And again, don't let it surprise you if it's not a full $10,000, because like Dean said, many employers are finding that it's based on a number of employees. So 1,000 per employee up to 10. So if you have 6 employees, 6,000. So that's what we have been consistently hearing. So a couple of questions about payroll services, and I think that this has gone back to what we were talking about earlier, Mike, about setting up a separate account just for these dollars. So I see Brenda, Marie, and Karen all have mentioned if they use a payroll service that has direct deposit, that cannot easily draft from a different bank account just for those 8 weeks. For example, and Marie is asking, can you just transfer a lump sum to cover that entire amount to your payroll service? And then another question about if you're the only employee of an LLC who takes distributions rather than payroll, how do you prove payroll? I might have put Karen's question in and lumped it with payroll services, but can we just tackle that?
So I'll start to say that the key aspect of this would be where it's all documented. So the payroll service can provide the exact amounts that are being used for payroll purposes, and the employer can show that it was taken out of whatever account it is, whether they set up a separate one or not. As long as there's a complete, distinct audit trail, then they'll be able to provide that as documentation at the time in which they apply for the forgiveness. And it does get very complex when we talk about things like payroll taxes and the like. So if the payroll company has all of that, and they should, discreetly defined as to where this money came from, then that corresponding detail is what could be submitted.
I would add to that, to use the payroll service or your internal payroll records, and it's not necessary to recreate those bank drafting situations on the new PPP account. What we've been advising clients is when you get your loan, you set up that new account, you transfer the entire, first of all, you're going to get those proceeds in the account that you indicated on your loan application. So that's going to come in generally to your normal operating account. Then open up that second account, transfer the entire loan proceeds over to that new account. When payday comes and the payroll service or your internal bookkeeping department calculates payroll, transfer the gross amount from the PPP account into the account from which the paychecks are going to be distributed from. And then use the underlying payroll summary reports to substantiate and document the amount of the gross payroll. You're going to use the bank statement, again, as a tool in saying, here's where all the money went in and here's when it came out. And on May 15th, there was a transfer from that account to your operating account for payroll. Here's the underlying payroll reports that document and support that exact transfer amount. You can do the same thing with those other expenses, your utilities, etc. You can, if you want, pay them out of that separate account, but that's going to require getting checks and things of that nature. We believe it will satisfy, at least we're hopeful that's going to satisfy the requirements that'll be set forth, where you can show the transfer from the PPP account over to your operating account, and then you copy the invoices, the bills that you have to support that transfer.
Great point. There's a lot of documentation on that. That is,
yeah.
And that is maybe what you're going to need to substantiate this at the end of your 8 weeks. Sounds great, Dean. Thank you. Question. This is a good one. What happens if you do not use the full amount of the loan within the 8 weeks? Do you have to return the difference? We may not know the answer to that yet.
I think you're right. I think you're
jump
in.
Oh gosh.
Maybe Fred has.
Well, let's kind of make an assumption that the day the loan closed, the bank issued the full amount of the proceeds. And then for whatever the various reasons, the borrower either was not able to rehire staff or whatever and didn't use it all, that set of circumstances plays into the forgiveness. You will still owe what is not forgiven under those terms that I mentioned earlier, 1%, 6 months payment deferral, and 18-month AM. So I guess my answer to the question is you are not required, if you don't use it, to give it back, but you are required to pay it back over that 2-year period. A portion of it might be forgiven. What is not forgiven is an obligation and a loan that must be paid back.
So there are some questions coming in about FTEs, full-time employees, and loan forgiveness. So let's go back and recap on this. So you were loaned 2.5 times your average monthly payroll, okay? And that was based on the number of employees that you have that consume that payroll, okay? So say you base that loan on, the payroll of 10 employees. The forgiveness on that is going to be based on a number of employees that you bring back, the 10 it was calculated on to the 10 that you bring back. So there are questions, many questions, Mike and Dean, about, so for example, did I hear you say employees would not be approved for unemployment if they chose to not come back to work? What if they're part-time employees? There's another question about, do you need to replace them to satisfy the FTE headcount? Contract labor employees? You want to take a stab at any of those?
Well, I'll start, and then I know that there'll be more added. So the question of FTEs, when the person sought the loan, in order to go through that calculation process that Dean mentioned, they came up with a number based on what they knew at the time. The SBA realizes, and these are from answers we've gotten, things will change over time, but as long as you can document that you used it for payroll purposes for the employees you have on during that 8-week period, once again, documenting that, then it is in that forgivable status. The important thing to know is that the process is intended to bring the employees back to full status. And so as long as you are staying within the definitions of the payroll purposes we talked about, and you can substantiate it was paid to these employees in whatever manner, which, by the way, also part of your earlier question was about independent contractors. Same thing, this documentation, even in the case of contractor, what SBA is saying, as long as you have supporting documentation such as bank records, sufficient to demonstrate the qualifying payroll amount, then you've used it for the intended purpose.
Dean, do you want to add anything to that?
Well, I guess let me talk about that independent contractor, because there's sort of two components. If you're an employer who applied for the loan, you were not permitted to include the payments to your independent contractors as part of your average monthly payroll cost. Those independent contractors were eligible to apply for their own PPP loan based upon their tax reporting. So when that business is using their PPP monies, it is for employees, W-2 individuals who receive a W-2. If you issue them a 1099 as an independent contractor, those are not includable payroll costs for meeting that 75% threshold.
Speaking of 75% threshold, a question came in, what if you don't use 75% payroll? Say you only about 25%, will the payroll portion still be forgiven? And we just cannot stress enough that there's that 75-25 rule. Do you want to say it again?
Until further guidance is really issued based upon the interim final rule that the SBA issued that kicked this whole program off, and further guidance that we read in their frequently asked questions and other guidance that they've so far have issued, they make it very clear, in my opinion, that if you do not spend at least 75% of it for payroll costs, you're not going to get the loan forgiven. What we don't know is if they only use 25% or 40%, will they get a pro rata forgiveness? I hesitate to go, out on the limb and say you're going to get a portion of it forgiven. I think you have to attain that 75% to have a fighting chance for forgiveness on the program.
Fred, this question may go to you. What are the terms of the repayment? The rate, term, collateral, personal guarantees? What are the costs and fees associated with the loan, and who pays them? So I guess if this means that it's not, a portion of it is not forgiven.
Yeah, and I'll add a little more to what I stated earlier. So the rate is fixed at 1%. The borrower does not pay a fee to the bank or to SBA. The payment terms, the first 6 months, there's 0 payments to be made, followed by 18 months that fully amortize the remaining balance. There is no personal guarantee, and there is no collateral. So like the way I think of it is you get let's just say you get a $40,000 PPP loan, and everything goes as planned and it's all forgiven. It's going to be forgiven within that 6-month period where you're not making payments. Some of the other questions that have come up, what happens if it's not forgiven? The balance is not forgiven, whether it's 10 out of the 40 or the full 40 is still a loan that you're obligated to pay, and then it falls under that loan structure that I just mentioned.
Okay. Another question. How are retirement benefits paid by the employer handled? Is this considered payroll? Dean, that sounds like a good question for you.
I'll take that one. Retirement benefits are a portion of the payroll costs that you include in determining whether you meet that 75% threshold. So that would be the employer match on a 401k plan or employer contribution to a profit sharing plan. It's the employer's expense for that retirement benefit. Also included are the insurance benefits in calculating payroll cost. What is not included is the employer's portion of the Social Security and Medicare tax. That is not an includable payroll cost.
That's a big distinction there. So the employer portion of FICA.
Correct.
Okay, very important. There are some questions that are coming in, and Mike, you may want to take these questions about perhaps paying for things within your 8 weeks that are outside of actually happening in the 8 weeks. So say, for example, there was one chat question that came in about paying a couple of months rent, even if it goes into like July when the 8 weeks is ended in June. Do you, again, I know that a lot of these questions are about substantiation and about forgiveness, and we just don't have a lot of clear rules. Does the expense or the salary or the bonus that they're supposed to get have to happen in that time in order to be forgiven on this?
So it's interesting that you raised that question, because we just earlier today submitted a question to SBA. I'll start with your last point first. And this is interesting because the way the question arose, it was actually submitted by someone prior, is a bonus part of the forgivable payroll? So the answer we got was that a bonus would not be included in a forgivable part of payroll. But it's interesting because the next question might want to be, well, what is a bonus? Is it an incentive payment? Whatever. And I know Dean and I exchanged some thoughts on that too. So that might be a one of which there's a specific case for a specific individual business that we would recommend be submitted to the SBA directly. And I think that's part of, we can just imagine the challenge that SBA has, right? In that every business is a little different. It has a different set of circumstances, different situation. The point you're bringing out about point in time issues. And I can say that would be a question we would submit, actually, is about point in time. I know Dean or Fred, you may have a different perspective on that as to when the actual expense incurred.
Let me, Mike and Dean, I'm going to throw this out to see if this might add a little clarity to it. So you guys have helped clients actually submit the applications, a lot of applications. What I have been assuming all along is that the forgiveness piece of it will basically check what was presented in the application process. So if payroll, whether it's hourly or I should say compensation expense, because it's more than just payroll. So compensation expense X the FICA, it was 40,000. I don't think it has to be spread over, equally over eight and a half weeks or whatever it is. It's just saying you have these employees, and this is what the compensation expense was. This is what my rent payment was on the building. And I suspect that the documentation on the back end will try to match up to what you put in on the front end. Does that make sense to you guys?
Yeah, it does.
Yes.
Yep.
Go ahead, Mike.
No, I'm just going to say, and I think that's what that factor, the 2.5 factor that we spoke of in the very beginning about we can't recreate that point in time exactly because that was the time of application, right? So that's an estimate, if you will, based on what the loan amount is going to consist of. And once again, I think what Fred's also saying is that as long as you can substantiate it was a business expense, it fit within the 75-25 parameter for PPP, and there's a record of it, then that's what would be submitted in order for it to be forgiven.
Yeah, I would agree with that. When you go back to the application, when they talk about what payroll is, they talk about its salaries, wages, commissions, and tips. And I know the SBA answer seemed to indicate, well, the word bonus wasn't used, so therefore it's not included. Everyone understands that, these applications were based upon information as we had it at the time. And bankers were instructed to, get copies of 941s, 940s, and they were using, if you were in business for all of 2019, you were using that payroll information divided by 12 and coming up to average monthly payroll. There was no indication about fluctuations in the payment of that compensation. And if you have a business where you paid quarterly or semi-annual or annual bonuses, those were included in that 2019 payroll cost to determine your average payroll. It seems that if you don't take that into some consideration, there's going to be businesses that just based upon 8 weeks of payroll are going to fall short of the 75% because that bonus amount may not normally occur within that 75 or within that 8-week period. So I think that's a challenging issue that each business has to look at and address on, in their own facts and circumstances. It's a real challenge.
And I'll just add one more thing, and that is in that definition that Dee just referred to again, what we haven't mentioned already, we should, is that there is a limit per employee of $100,000 annualized pay. So that's the only limit that was stated in the calculation in terms of forgiveness. So just so people know about that.
Okay. A couple of questions, part-time employees and how they factor into the payroll forgiveness equation. Because I know that in determining the loan, 2 part-time equaled 1 full-time. So in bringing them back, can you do the math on perhaps not bringing back 2 part-time and having 1 full-time, or 4 part-time to equal, anyway, but getting creative on the math of part-time versus full-time?
Well, I'll take a stab at that. Mike can find the facts behind it, but it's defined as full-time equivalent. So if you had 2 part-time employees in your calculation, that was 1 full-time.
Mm-hmm.
So if you brought back 1 full-time employee instead of 2 part-times, I believe you're going to meet that FTE test. Similar if you brought back 3 part-time people working less hours than the 2 did, you're shrinking hours, so to speak, but they come up to the full-time equivalency, I think you'll be all right.
Question about restaurant and tips factoring from restaurants and how tips factor into payroll.
Tips are included in payroll. So payroll costs, salary, wages, and tips.
Questions from the self-employed, how their accounting on PPP would be different perhaps than a more traditional business that had a payroll service or bookkeepers and things were a little more, so these hybrid type businesses. Dean, do you expect that they need to have more documentation or structure things a little differently during this 8-week period?
Well, I'd love to see some guidance from SBA in terms of how they're going to address that, because unfortunately that seems to be a big gap. I really don't know what that answer is. I think from a practical perspective, I've talked to a couple self-employed business owners, and what I've recommended at this juncture is that they look at their 2019 Schedule C, Schedule F net business income that was used to determine their PPP loan, and that they divide that amount by 52 to arrive at an average weekly amount, and that they take a check, which for a self-employed person in essence is a distribution, that they take that amount during the 8-week period and then use, the copy of the check, copy of their business return from the prior year to substantiate, taking that money. I think they could probably take more. Unfortunately, we're sort of on really, really thin ice because we don't have the guidance yet in terms of what's going to be accepted by the SBA.
And Jill, I hope that answers your question as well, because she is a sole proprietor using only 1099 contract employees, but was wondering if she could use the funds from the PPP to pay herself with proper documentation. I think we just covered that. I think we're good on that subject for our sole proprietors.
Yes, we can just add one more point, and that is that, just as Dean pointed out, the documentation is really key here, but it can include net earnings, right? So it's understood by SBA that it might not be a payroll check. It could be net earnings that are documented in some fashion.
This next question may go along with that. And oh goodness, it's been a long time since that grad school accounting class, but this might be more taxes than anything. Is payroll accounted for within the 8 weeks on pay days versus accrued payroll within the 8-week period? Dean?
Well, we're looking at it as paid payroll. And I think, again, I think it would really be helpful if we had some guidance from SBA in terms of what we're really talking about is cash versus accrual.
Yeah.
And there's been no guidance that I've read in terms of clarifying actually paid or incurred or, accrued during that period. What I've advised, because this really extends to the retirement benefits, is that, some companies don't, well, if you're matching a 401k, you have a prescribed time period to make that match in order to have it, as a qualifying deductible expense. If they're making a discretionary profit sharing contribution and use that in their calculation, they may not be making that payment, but annually. And so you really got to look at your circumstances to see what you need to do to meet that 75%, that 75% level. And hopefully we'll get that guidance on paid or accrued soon.
Is SUTA included in payroll cost?
Yes.
Okay. Oh gosh, guys, so many great questions. I want to get to a couple more of these before we end here. Behind on lease payments. My lease qualify for forgiveness. Again, we're getting into that 25% that you can use it for, right?
Right.
Yes.
Okay. All right. Just want to make sure I get to every question I can. Again, more about how it interfaces with EIDL. What haven't we covered? Where's some any holes you guys can see, things your clients are coming to you asking?
I think we've covered a lot of the most common questions. The key is that guidance is continuing to be changed, and as we mentioned many times today, the rules are changing. And some people may say, well, they're just getting clarified, and that may be true. Before we came on here, I went on the SBA Treasury website, and they added 3 more frequently asked questions yesterday. So I think Mike's going to share how to drill into some of those sites. I would just encourage all of you to you know, check those sites periodically, because that's where they're issuing the official guidance at this point. There's going to be more down the road. I'll just briefly touch on, just so you're aware, in case you hear it on the news or something and you say, well, they didn't cover that. The IRS issued a notice at the end of April regarding whether these expenses that you're using your PPP proceeds for are going to be tax deductible. And the IRS sort of jumped out on that and said, if you have a forgiven portion of that loan, they're rendering that those expenses are non-deductible, which has raised ire with several politicians and really the ICPA as well, saying that is not the intent that I think the general public understood of the PPP program when they talked about it being a forgivable grant. So stay tuned for that. I don't think that issue is necessarily final and fixed, but that certainly can have some ramifications and implications for businesses going forward.
That's big. That's really big. A quick question about, and I've heard actually this on not only from a question we have in our chat, but from other forums as well, and that is those businesses that use an employment agency or a temp agency to hire workers, and those are 1099s. Those are not your employees. Is that correct? They can't count towards payroll?
I thought there was, they're really not 1099, because if you're using an employment agency, you're paying the employment agency. They are the employees of the employment agency.
Right.
But
they're like a 1099. They're coming into your business, but they're actually employed by the temp service.
Right.
Temp service is paying their payroll.
Yeah, I would say that's a great question. I know we'll submit that because it sounds like it should be covered, because it would be an agreement between the employer and the agency, but we haven't seen a specific question in that regard.
Okay. Question about if they have a 1099 employee, could they transfer them over to W-2 now and then have them qualify as a payroll expense?
Perhaps. What that really starts getting into is the overline issue. Do you have an employer-employee relationship or not? And a lot of businesses try to skirt that to avoid employer payroll taxes, benefits, etc. There is a 20-factor test the IRS publishes to assist businesses in determining, is there an employee-employer relationship? I think you have to be careful if you're making that jump, what exposure you may be giving yourself and your business for the past, for that same person. If their duties, responsibilities are changing, I think you would have some foundation for changing that classification. If they're doing exactly the same thing they did before and you treated them as an independent contractor, I would challenge you, what's your basis for changing it to an employee relationship? If it's only to meet the test of the PPP program, I think you're on not real solid ground.
Yeah, shaky ground. Self-employed with an individual health plan paid by the business, can PPP funds be used for this? So again, self-employed, a little different.
Would you repeat the self-employed?
Sure. Self-employed with an individual health plan that is paid by the business. Could the PPP funds be used for this as a payroll expense?
For an employee?
Self-employed.
Just a self-employed person with no employees.
It's just a self-employed person. Yes, I just got a yes.
I would think yes, because probably in their application, they would have included those health premiums as part of their payroll costs. That's a little tricky, because if they're self-employed and they're paying that health insurance, that health insurance is not a deduction for the business. It's a page 1040 deduction, not a Schedule C or Schedule F deduction for the self-employed person.
You know, there's an enduring theme that keeps coming up, and that is based on your application for the PPP comes into play when you go to substantiate the spend on the PPP. So I know that we're waiting on a ton of guidance on that, but Mike, if you want to, I know on a separate call, we were talking about this, and we just want to really make sure, even though we don't have these strict guidelines and we don't have guidance on the substantiation of this at the very end, Mike, if you want to touch on just how important that it is that fraud is a very big, ugly word that is being tossed around in the midst of all of this, and how important that it is that businesses act in the best interest of their business, that they do things that are transparent to their companies, to how this process is going to go forward, and that they just don't try to beat the system on this. If they have a question about it, ask somebody. Do you see where I'm getting at with that?
Yes, absolutely. And one of the things that's come out of this is the importance of the relationship between the applicant and their lender, right? So when they made representation to the lender originally as to this is what their business operation is, and here's the payroll related expenses they have and the like, they're signing a document, either electronically or in person, obviously, but they're affirming that all the information is in fact accurate and true. And so when they look at the language, and we highly recommend that whatever process they've ever used and when they've ever taken out a loan before, or maybe more importantly, if they haven't, that they read that very, very carefully, and they ask questions of the lender. What does this mean? What happens if this? What happens if that? That it is documented. Because on the other side of this, right, the whole objective we believe that an employer should be doing here is they want to keep their employees paid. But then they want to turn this loan into a forgiven loan, right? That's the whole objective. Because, and this can start actually on the 7th week of the covered period, that employer is going to need to go back to the lender and say, here's the documents. This substantiates the number of full-time equivalent employees, the pay rates, the payments on the eligible mortgage, the lease, the utility obligations. And then the borrower certifies the documents are true and that they use the forgiveness amount to keep employees paid and make eligible mortgage, interest rate, utility payments. That becomes the basis of the affirmation that I've used this loan properly. By the way, if that amount is over $2 million, and we haven't seen too many of those in the low country, but if they do arise or you hear about them, then there's a mandatory audit by SBA. You probably heard about those. So yes, the accuracy and affirmation by the employer that they've done exactly what is asked of them, and they have it all well laid out so that whoever asked for that documentation, whoever's should see it, it's all very clear and transparent. I'll just reinforce the word you just used, transparent.
Dean, would you like to make any comments on that as well?
Well, I think Mike summed it up really well. Documentation is going to be very, very important. And so keep in mind when you're using those monies from the PPP loan, ask yourself, if someone asks me, what did you use the money for? Do I have sufficient records to document and substantiate that? If it's an electronic transfer, you've got bank statements to back that up. Whenever you've got the opportunity to get a receipt, get it. And I think the key in this is follow your normal business practices. Try to keep it as simple as possible, but document, document, document.
I've gone as far as to tell some of our chamber partners that if you have a friend in the nonprofit side of things that administers grants or that nonprofit receives grants, you might want to have a conversation with them because they are really used to this kind of process, whereas our small businesses are not. This is all new. What are you talking about? A loan that's forgiven? But our nonprofit community knows how this works, very familiar with it. So that you reach out to a friend of yours that might be in that space. I cannot stress enough how thankful that I am for the wisdom of Mike, of Dean, and of Fred. And I just, again, want to make sure that you know that our Low Country SCORE chapter is there for you. They have a team assembled, as well as our small business development centers to be able to help. We are happy to schedule more of these as questions and more guidance comes out. Thank you for your questions. Any additional ones that you'd like for us to specifically, that we didn't get to today, perhaps to get to these guys and gals, please let me know, and I will be glad to shoot it over to them and connect you with a SCORE mentor. Mike, I know you're busy. Do you have more SCORE mentors that can attach to people these days?
Absolutely. We are literally ready for those, and we're very happy to do it. And I think the point you just made, Hannah, I want to emphasize that our mentors are talking with business owners who are under stress. This is a very, very difficult period for them. Some have never applied for a loan, haven't had to. Everything was going along okay until the lightning bolt hit of this virus. And so on top of the health related issues that they may be dealing with, or any of their employees or whatever in the community, these decisions would sound like they're very, we'll take our time and analyze them, are really real-time issues for them. And as you pointed out, whatever assistance we can provide, sometimes we're that third party to it. It's their business, their money. So we're here, our mentors are here and available, and we're very happy and honored to help them in every way, whether it's working with the lender community that we work closely with, getting information from SBA. And by the way, we highly recommend everyone, especially if you have a loan, for the point you were talking about at the very beginning, is get on the SBA email list. Very easy, go to SBA. At the bottom of the website, you put your name in there, your email address, and immediately you're getting information as is released from SBA, as well as being able to go and look at the frequently asked questions. We also know people running their businesses may not have time to stop everything and go look, but they need to make sure somebody is. If they're not, they're talking with their lender.
Our SCORE mentors, I call them emergency room trauma doctors for your business. They'll take the scans they need to get to the problem. Dean, thank you so much. I know that you are in the private sector and you are in the business of running a business yourself. Please do not bill us for our time today because it's been extremely generous. Thank you. And to Fred Green, our thanks to you for your expertise, and of course to your colleagues of bankers around the state that I know are working very hard and are as stressed in all of this for the end guidance as we all are. So with that, we will end the meeting. Send us more questions, and we'll put together more webinars as you guys tell us what you need to hear about. Thank you. Have a great day. Be safe.
Thanks everybody.
Thank you, Hannah.